Welcome to our weekly roundup of key economic and business developments in Sri Lanka. I'm Nishani Pigera, and here are this week's main stories. IMF calls for a stronger budget for Sri Lanka. Central Bank to crack whip against high lenders. Apparel exports plunge on slowdown in Western markets. In our top story this week, the International Monetary Fund is looking for a strong budget and narrow a deficit from Sri Lanka, says Peter Brewer, its chief mission to Sri Lanka. The multilateral lending agency is forecasting a 15% shortfall in public revenue this year. Brewer added that the objective is not to let a shortfall happen next year and ensure a revenue exceeding 12% of GDP. Sri Lanka is expecting its second tranche from the IMF's Extended Fund Facility, having successfully engaged on a staff-level agreement last week. The second tranche awaits approval from the IMF Management and Executive Board. State Minister of Finance Ranjit Siambalapitiya warned that the Central Bank of Sri Lanka remains on high alert on commercial banks that are yet to reduce interest rates. He added the regulator would continue to closely monitor all commercial banks and financial institutions that have failed to abide by the recent central bank circular on the reduction of interest rates. However, the minister acknowledged that certain banks may face a difficult situation when adapting to low interest rates, having provided high rates for long-term deposits when the interest rates were higher. The Asian Development Bank agreed to provide $100 million for small and medium entrepreneurs in the country who find it difficult to finance their businesses. Titled the Small and Medium Enterprise Development Finance Project, the grant is in response to a proposal presented by President Ranil Wickremesinghe. Further, a scheme to prioritize asset-based lending over cash flow-based lending was established with the objective of allowing less rigidity when lending. In order to stimulate economic activity in the country, the government is implementing a series of measures aimed at increased borrowing. Sri Lanka's exports in September fell almost 12% from a year ago to $952 million, according to the Export Development Board. This was largely due to apparel exports declining a significant 24.6% due to a slowdown in the Western markets. Tea exports were up 1.8% to $119.96 million, while seafood grew 50% to $28.1 million. Exports to the United States of America, the country's largest export destination and main buyer of Sri Lanka's apparel, fell 26%. Total exports from January to September 2023 were down 10.3% to $8,961.62 million. In our weekly tourism update, tourist arrivals during the first 22 days of October reached 77,763, pushing the yearly total past 1.08 million. Average daily arrivals fell further to 3,535. The primary source market in the month was India, followed by Russia and the United Kingdom. India arrivals continue to increase, accounting for 26% of the month's arrivals. And now let's take a look at the weekly movement of the oil share price index and the S&P SL 20 index at the Colombo Stock Exchange. In other market news, Sri Lanka's Union Bank said CG Capital Partners is now its ultimate controlling shareholder following the indirect acquisition of Culture Financial Holdings, which held 70% of Union Banks as of 30th June. CG Capital Partners is a unit of Nepali businessman Binod Chowdhury's CG Group. At the Treasury bill auction held on Wednesday, yields on 91 and 182-day maturities contracted. Bids amounting to 216 billion rupees were received, of which 160 billion rupees were accepted. The Sri Lankan rupee was steady against the dollar this week, with the central bank's indicative mid-spot rate ranging around 325 and 327 rupees. And with that, we wind up for this week. Do subscribe to our YouTube channel at the link below for regular updates on economic and business developments in Sri Lanka. Until we see you again next week, thank you for watching. Stay safe.